presentation, please. Okay. All right. I'm going to very quickly, only have 4 or 5 slides. I'm going to talk about the, from a investor's perspective, what do we see the advantage and the disadvantage of China has for venture capital investors. Of course, since last year, China has become one of the hottest, if not the hottest, topic or target market among VCs, VC funds worldwide. But what makes China all so attractive to the VCs? Because this is really a new phenomenon. This is my 13th year of investing in China and Asia in general. Quite frankly, only in the last 18 months or so, the US VCs or other part of the world VCs really become interested in China. I think there's a few reasons for that. Of course, the more than a quarter century of the fast economic growth has created one of the largest consumer market in the world. We know that China has now become the largest consumption market for telephone, TV, internet, and computers. Probably, internet is still a little bit lag behind the US in terms of the users, but pretty soon, I think in months, China will surpass US. One footnote, it is unprecedented in the human history that there's an economy in such a massive scale has been growing at close to double digit for continuously for over 25 years. This is quite remarkable. China has a very good infrastructure and a large pool of quality engineers and skilled laborers. Also, from an investor's perspective, China is the most inefficient country in the world in deployment of the capitals, and that created a tremendous opportunity for private investors. Private sector has reached the critical mass, both in size and in mass. New business model has been created in China later. This is something I think is worth to point it out. We began to see something very new, the business model that never happened in other parts of the world. Historically, China was a copycat. Most of the Chinese business was copied the business model from here to China. Like we have eBay, China has Ichinet. We have Amazon.com, China has Dangdang. You have a Google, China has Baidu, so on and so forth. But Fox Media, China, arguably are the only one that has this distinctive business model. Still relatively cheap valuation for VC investment. Lastly, but probably not the leastly, is a cheap energy and the land use subsidized by the government. Now, bear in mind, Chinese energy price is less than 1/2 of the world price. It's heavily subsidized by the government. But making money in China is not easy. China remains to be one of the most difficult places to make money. People will talk about it, but I think if you look at the history, still very few people actually made money. Government restrictions and prohibit investment is still in many sectors. For example, media business is heavily regulated. Also, telecom service industry. Lack of legal infrastructure to support venture and direct investment. The current law was enacted in the early 80s, principally for foreign direct investment for strategic investors. Therefore, the they're really lagging behind. Just for example, under current law, convertible bond, preferred shares, and options are not allowed. It's illegal. LP-GP structure is also does not recognize in current Chinese law. We were the first company established a what we call a non-legal person fund in China a year ago with the Tianjin government. This is regarded as a breakthrough, but this is nothing. In here, you can do it in probably in 1 day. Many double tax issues still exist, although nobody really looking into this seriously today. Exit is still a big issue. China, we can't really list in China. If we can, I think the government is working on that. That actually will open a good exit route for foreign investment. We still have facing the foreign exchange control, and to establishing overseas entity, you have to get a safe approval. Now, above all, the biggest problem we have today still in China is that too many approval process, and it's like operation in the black box. In short, too many people can say no. Very few, if any, people can say yes. Now, where the attractive opportunity lies. Generally, we see looking for creative technology, brand name enhancement, disruptive business model. But in China, it seldom has creative technology, and the domestic brand name is a scarcity. However, China has numerous application technologies and a new business model being created in mobile and particularly in internet application sectors. And China also offers ample opportunities for arbitrage the price differences. We knew that the things can be made in China are significantly cheaper in terms of price. Those, I think, will change gradually, especially when you taking into account of the government subsidies for the energy part. Healthcare, renewable energy, logistics, supply chain management, and other consumer-related business offers good potentials for creating world-class company. One thing exciting today for VC investment in China is that you can invest in a relatively small company, and with a relatively short period of time, it can really grow and become a world-class company. That is something that is quite exciting from a venture capital perspective. Is China has a venture capital investment bubble? I think the answer is yes and no. Overall, I think capital supply and demand is still in favor of investors. Let's look at some numbers. In last year, total VC investment in entire China is about 1.04 or 1.07 billion. Okay. Which is about 1.7% of the total foreign direct investment in China. Compared to the US VC investment of 30 billion plus a year, it is very small. Now, in comparison, Israel last year, which is about 6 million population, has about 1.8 billion VC investment last year. You can't really argue that is overheating. However, in those high-profile deals, particularly those funded by people like you, valuation has increased sharply. And because you guys know how to shopping around in the Sun Hill Road, it's very efficient here. Overall valuation is still attractive compared to that of the US or other parts of the world. That's why the venture capitalists are very smart people. And when they go, they know they can make money, otherwise they will not go, no matter how much you tell them. Last one. What ahead of us? Some just, my own thought. China provides the best, if not the best, investment opportunities in the world in the next 3 to 5 years for VC and private equity investors in the world. Now, that's I think, my personal view. I could be wrong because the famous John Fairbanks once said, the only thing certain in China is its uncertainty. Anyone trying to predict something is going to happen in China is facing a great challenge. Foreign funds will still dominate the industry, but the managers and the decision-making are shifting toward local. China remains to be one of the most difficult places to make money. It is not the place for everyone. Those with local deals sourcing network and the decision-making capabilities will likely be the winners. Current frontier will not last long. Firms who rush in will rush out, particularly those flying VCs. Does patience pay? We don't know. Thank you.